Welcome along to Trader Talk Radio, the original show, where we look at the market analysis for the week ahead. Today is the 6th of November, 2022. Another Guy Fawkes has passed us all by reasonably harmlessly. Tonight I'm joined on the show by Ainslie, who's going to be going through oil and gold for us, and George, who will do a recording for on the US dollar. Big topics, all of these right now in this market, really and truly. If you can work out the US dollar, gold and oil, you've got a big, I actually think a big 5 or 6 years in front of you. There are some big things going on in all three of them. So make sure you stay to the end and listen to all of it. I'll be introducing each session one piece at a time. Ainsley, are you ready to go?
Hi, Paul. How are you?
Ainsley, I am good. I'm going to get Sam to unspotlight me and spotlight you. Ainsley, we're going to start with gold. Huge time for gold. We've got this big seasonal move coming that we were talking about the other day. We've also got this first proper sign of reverse on the US dollar. If the US dollar was to reverse a little bit, bond yields could drop, gold could go nuts. Interesting time, Ainsley. Interesting time. How do you look at this ahead? And when does this seasonal thing start, and how do people get involved with it?
Look, I'm pretty excited, Paul. I mean, have a look at Friday. So let's just, can you see my screen?
Yep, review weekending, yep.
Yep, so let's do a quick review of the gold. This is a technical review of what we saw this week, and we saw gold formed a triple bottom. All right, not a double bottom, not just a ring low. We saw a triple bottom bouncing from the important 1615 support level. Okay, Friday's price action with better than expected non-farm payroll figures and a marginally lower than expected unemployment rate. We saw gold bounce. So we saw the US dollar dive, and then we saw gold bounce. And it was one of the strongest daily moves that we've seen in some time. On the daily chart, price action formed in itself, its most current price action. We saw it form a ring low with a close above the 50 EMA. So that's an important technical level as well. On the higher timeframes, what we have seen on the monthly chart appears to have been halted, thank goodness, and that is 8 bars down. All right, so what we don't normally see is 8 bars. Once you see 8 bars down, and sorry, that would appear to be something pinging an MT4 somewhere in the background. After 8 bars in either direction, either long or short, you will normally see a bit of a retracement. It's just a technical thing, okay? So let's start with the 4-hourly chart. Look at this movement. It just, after NFPs on the third bar from the end, bang. But she's crossed the 25 on the 80 on the ADX, on the DI plus, and DI plus has taken over. ADX, MACD, all my indicators are telling me, hey, she's good to go on the 4-hourly. So that was Friday's action. Up to that, I mean, before that, we're all over the place. And obviously that big spike there in the middle was Fed Powell raising interest rates by 75 basis points. As you can see, there was an initial push up.
Yeah, interesting bar there, isn't it?
Look, what happened was there was a journalist who asked him through the interview. He reported they did the interest rate increase, but what happened was there was a journo that asked him, are you going to ease in December? And he would not guarantee that ease in the increase of the interest rates. He said, we will do whatever it takes to pull this inflation into line. That was interpreted in the market as, we're going to see another 75 basis point again when everybody's hurting already in December. So people were expecting maybe it will be a bit of a softer thing happening by December. Didn't happen. So look at it was a bit messy, and I've got to say, I slept through that. I was happy to say I slept through that. I was no way. I mean, you just have to look at the euro against the US dollar. You won't trade it in a pink fit. But look at this really strong, that's a 4-hourly. Let's just pop up to the daily chart. This 1, 2, 3, the 1615 level, so strong. So this is coming back to the end of September. Then we had another crack at it at the end of October. Now we've done a nice little ring low, and a close above the 50 EMA.
It's a big move, actually.
That's
on top of the do you think on top of the NFP number. Do you think there's a bit of front running here? People trying to get in front of the expected move?
Possibly. Stocks moved in a week earlier this year, as well as, look, who knows? We'll just go into the seasonality. Seasonality is basically mid-November on, but I'll go through that in the outlook coming forward. You can see that triple bottom really neat. Now, neatly on this is a weekly chart. You can see that it's just been awful all year. It's just been just down in one direction. After we had that initial push up from January, February, it just went where all year. But now you look on a weekly chart, we're just going sideways, but we're not going any further down, which is a good thing. So the other thing to note here on a weekly chart, and it's like turning the Queen Mary around, right? So we've got divergence. We've got price action divergence on the MACD histogram. And the MACD histogram, you'll see divergence happening faster and earlier than you do see it on the MACD and the signal line itself. Okay, so that's also a bit of a telltale sign. You can see the histogram is receding back to the center line. And once we've got that crossover. I would expect in the next week we'll get a bit of, it will choke a little bit, that green little line there through there that you can see with a level of, the nasty little level of prior support resistance is my 200 moving average. 200 simple moving average is a well-regarded level, sometimes used as resistance and support, but it's a very well-regarded level on any chart. So let's just see if it doesn't choke there for a little bit. And here's my monthly chart. Look at that. Hello. It's just ludicrous. But what's interesting, the DI minus on the ADX has turned down below. It's not saying it's going any high. It's not going to continue any lower. Okay. So I want to, obviously this will move a lot more slowly because it is a monthly chart. But again, you can see that that support level of 1615 well regarded. So the fundamentals that we can just do a quick review on. Gold's declined its halt on Friday, and we saw a really strong move for some weeks. We've had some global figures come out over this last on Friday as well. So one of the things that we have noticed is central banks have continued to accumulate gold with the purchases at a quarterly record high. So huge amounts. Central banks are stockpiling. The other thing we have seen is the demand for gold is up 28% year on year, 18% year to date. Jewelry consumption is up 10% year on year, and that's been driven mainly by India. And the other thing that we have seen in our fundamentals this week is the Chinese retail demand firmed as lockdown restrictions have eased. So gold is coming back in, and we know that gold is used in a lot of things like tech and batteries and jewelry. So huge demand there is actually starting to firm. So we move that all into, okay, what are we looking forward coming into the outlook beginning this week? So we know that it's bounced from 1615. We saw at the triple bottom on the technical side of things, but hey, let's have a look at that and involve ourselves with and combine that with seasonally. Hello. A lot of people know that I get pretty excited about gold around this time of the year because any time from about the middle of November, the rally starts, and there's some key dates. There's the 16th of November, there is the 27th of November, there is the 12th of December. They are key dates where I see a bit of a really strong move. So whilst I have seen on that weekly chart that I just showed you that we were looking at, we're coming into the 200 simple moving average, could we see a little bit of consolidation around there? Quite possibly. But let's just see. Now, we were talking on Thursday night, weren't we, Paul? And during the show, the company market update, we saw it take a nosedive, and I wasn't that fussed. I just said it's just going to come down. I'm going to be happy when it bounces off the 1615 level and puts that triple bottom in place. I'm happy. So any time from now, I mean, what is it? Tomorrow's the 7th. a week early with gold. Not a big one. It's not far out of the park, but just if that makes it, we've had a strong move on Friday. Perhaps we wait for a little bit of a retracement before we get ready to see if it goes again on the long side. You have seasonals, you have technicals, we have fundamentals. We've also got the other thing that is I'm watching as well is the predictions. Given Fed Powell's comments last Thursday, we'll see growing economic headwinds. So we've got high inflation. We've got the Fed Reserve not quite sure how they're going to try and pull that inflation into and under control. The bond rates are likely to begin to correct lower as they keep cranking things along. But for me, what is important is the real yields. And with inflation running off its feet, so real yields are your interest rates less your inflation to give us your real yields. Inflation's really putting a dent in those real yield rates. Gold and real yields are inversely correlated. That can only push gold up further. So you've got seasonals, you've got fundamentals, you've got the economic issue as it stands with what Fed Powell is probably going to do, and you've got a technical setup. We have got four things all lining up at the moment, Paul. So if you don't think I'm watching this thing like a hawk, there we go. So I won't be very, I probably won't be very chatty. Oh, I could be chatty. I'm always chatty, but come Bali, come the 27th, let me tell you, it'll be head down, tail up, and I'll be watching those charts like a hawk.
Going to be good, isn't it, Ainslie? Chance to get together and trade with the team and really focus on our own roles and have some great traders around us. And let's see if we get a couple of moves that really help us to smash it like we did last time. Be awesome, wouldn't it?
Yeah, my time to do that now. I've got a bit of a clear runway.
Nice. Cheers, Ainslie. We're going to go to George and do US dollar, then come back to you and do the